Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Cincinnati Financial Corporation Annual Report. Cincinnati Financial Corporation provides a wide range of businesses and services to its customers. At the core of their offerings are property casualty insurance products, which include coverage for commercial and personal lines. Commercial lines insurance offers protection for businesses against various risks such as liability, property damage, and workers' compensation. In addition to insurance products, Cincinnati Financial also provides other services including contract and commercial surety bonds, fidelity bonds, management liability, and machinery and equipment insurance. The company's personal lines insurance segment caters to individual customers with personal auto, homeowner, and other personal lines insurance coverages such as dwelling fire, inland marine, and watercraft. The excess and surplus lines insurance segment offers specialized commercial casualty and property insurance products that provide additional protection for businesses against third-party liability and property damage. The company's life insurance segment provides term life, universal life, worksite, and whole life insurance products, as well as annuities. Furthermore, Cincinnati Financial invests in fixed maturity investments such as taxable and tax-exempt bonds and redeemable preferred stocks, as well as equity investments comprising common and non-redeemable preferred stocks. The company also offers commercial leasing and financing services and insurance brokerage services to its customers. In summary, the businesses and services provided by Cincinnati Financial Corporation include property casualty insurance, products commercial lines, insurance personal lines, insurance excess and surplus lines, insurance life insurance investments commercial leasing and financing services, insurance brokerage services. Cincinnati Financial Corp's stock price has seen a significant increase over the past year, returning 22.82% from February 2025 to February 2026. This growth can be attributed to several positive news events that have contributed to the company's financial performance. One of the key factors driving the stock price increase is Cincinnati Financial's strong financial results. The company reported robust fourth quarter and full year 2025 results, exceeding estimates in both periods. Its operating income for the fourth quarter was $3.37 per share, beating the Zacks consensus estimate by 17.8%. Additionally, the company's book value per share rose 15% to $102.35 as of December 31, 2025. Another significant factor is the increase in dividends. In January 2026, Cincinnati Financial announced an 8% hike in its regular quarterly cash dividend, raising it to 94 cents per share. This move indicates confidence in future earnings and can attract income-focused investors. The company's strong third quarter 2025 results also contributed to the stock price growth. Net income for the quarter was $1.122 billion, or $7.11 per share, a notable increase from $820 million, or $5.20 per share, in the same period of 2024. Overall, these positive news events have driven Cincinnati Financial Corp's stock price to increase by 22.82% over the past year. Cincinnati Financial Corporation market capitalization of $25 billion is significantly larger than the average industry peer of roughly $3 billion. This shows that Cincinnati Financial Corporation holds a significant advantage in their industry. Cincinnati Financial Corporation trades at a lower price-to-earnings ratio of 11 times and a lower price-to-book ratio of 1.57 times relative within the industry. This makes the stock valued slightly lower than its peers in the industry. This likely suggests that investors are less interested about the company, or it could be that the stock have not caught up to the industry valuation and should further be investigated. The leverage on the balance sheet appears elevated, with liabilities of 62% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 2.21%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline are primarily related to the insurance industry's performance. On the positive side, revenue growth is driven by an increase in premiums earned across all insurance segments and a growth in fee revenues for commercial, personal, and excess and surplus lines insurance. This indicates that the company is experiencing a surge in demand for its services, leading to higher earnings. However, there are no explicitly mentioned drivers of revenue decline. This suggests that the company has not faced any significant challenges or disruptions that have led to a decrease in revenue. Overall, the data suggests that the company's revenue growth is being driven by strong market performance and increasing demand for its services. The net income of the company experienced fluctuations between 2024 and 2025. Initially, it increased from $1.2 billion in 2024 to $1.4 billion in 2025. However, this trend was short-lived, as the net income decreased to $962 million in subsequent reports. The decrease is attributed to various factors, such as increases in actuarial losses and discount rates, as well as less favorable return on assets compared to 2024. The profit margins of the company also underwent changes during this period. Although not explicitly stated, it can be inferred that the profit margins were stable based on consistent net income values. However, the statutory net income margin as a percentage of revenue for 2024 was not provided. The decrease in net income is likely to have impacted the profit margins negatively, resulting in lower profitability for the company. The company's debt level remains relatively unchanged with a long-term debt of $793 million. Additionally, there has been no significant fluctuation in interest expenses, which have remained stable at $14 million for 2023, 2024, and 2025. This suggests that the company's financial obligations are consistent over time, indicating a manageable level of debt and interest costs. Management's outlook for the company is focused on long-term growth while also meeting short-term liquidity needs. They aim to maximize total return by investing in large-cap, high-quality equities that have historically performed well. In terms of benefit payments, management expects to make significant payments in 2026 and beyond, totaling $40 million in 2026 alone. The company is also preparing for a major payout event in March 2026, where they expect to pay out performance-based shares at a rate of 200%. This suggests that the company's financials are strong enough to support such large payouts. Furthermore, management has implemented various risk management strategies to mitigate exposure to market risks, credit risks, and operational risks. Overall, management's strategy is centered around balancing short-term liquidity needs with long-term growth goals, while also managing potential risks to ensure the company's continued success. The company has made several acquisitions over the years. Starting from 2023, it acquired a total of 72,549 shares worth $8 million. The following year, in 2024, the company expanded its portfolio by purchasing 259,224 shares, totaling $33 million. In 2025, two separate transactions were recorded, with the first one involving no specific details, and the second one, where 125,845 shares were acquired for a total of $19 million. The company has a history of paying dividends to its shareholders. In 2025, it declared cash dividends per share of $3.48 and also paid out $550 million in dividends from its lead insurance subsidiary. Additionally, the company made smaller dividend payments of less than $1 million on its common stock to its pension plan in both 2024 and 2025. While there is some mention of share activity, it appears that the company has not engaged in significant share buybacks. Instead, it acquired shares from associates as part of option exercises. This suggests that the company's primary focus has been on distributing profits to shareholders through dividends rather than repurchasing its own stock. That concludes the financial summary for Cincinnati Financial Corporation. Feel free to comment below, and I will be happy to answer them when possible.